Getting a look at our market overview for the upcoming week. This is Coach from WinningStockCoach.com. Wanting to talk about a little bit of expectations. Now, we saw a few weeks ago they came out and Bernanke said, "Oh, we are going to taper." A lot of people expected that would cause a fall in the markets, and what did it do? It shot up because they kind of put that little kicker in there. They vowed to keep the interest rates similar, and we made a run, and now it comes down, and then all the boo birds, they come out and they say, "Oh, it closed down for the first week of the year. That's a bad thing for the markets." Well, it gets very difficult as a trader. You listen to the media, and they scare you into selling or not buying when the government shutdown's happening back here, only to find that by the time they said, "Oh, it looks good," it's already at the next top. They scare us back in August about this taper and how detrimental it could be, only to find that by the time they're saying it's good was the day that they said no taper. It shoots up only to pull back again. It can be very, very confusing. So one thing I've kind of started to realize is sometimes when the media tries to scare you is when you should be willing to buy. Maybe not necessarily buying big, but buying a little bit small, just in case it were to go. But if it were to fall, your risk is minimal based on the smaller position size. Now, what we saw Thursday and Friday on the S&P 500, the chart SPX, we had a bit of a fall, and on Friday we actually held that low. It'll be interesting to see how it does open up come Monday. We do have a trend set in here, this peach colored line that we could pull back to. We have the highs from this consolidation period. Another area we've been watching, with the coaches roster list in our chat room, we've been setting up these horizontal trading channels through these consolidation periods. So if it were to come down and retest around that 1810 level, I think that would be a buying opportunity. Also, this peach colored trend line, I don't think there's a lot to be terrified of. I think you should always be willing to buy off support. There's a risk in any trade you make, so you have to be willing to understand that and keep your stops tight and be entering off of support, so that if the support's failed, any loss you take would be pretty minimal. Now, the difference, though, that I will mention is we are having a fundamental change in the markets right now. They are reducing the quantitative easing. 10 billion a month being reduced from 85 billion to 75 billion. So it could have an effect and could make it fail some of these trend lines. So you don't want to be sitting there at them waiting for them. You want to buy on a positive movement. And even though you don't really trade the SPX chart, we use this chart to kind of dictate a lot of the trades we do make, because a lot of the charts do follow the S&P 500. So overall for the S&P 500, watching a few support points, I'm not necessarily convinced that it'll have to drop anymore, but if it does, I know where to buy at. So we'll be looking closely at the SPX chart, as I do all the time, all day, every day. I'm watching the S&P 500 chart, so be interesting to see how it opens up Monday. If it drops Thursday's low at the open Monday, then I think it's safe to assume we will trade back into the support point set by the highs of the prior consolidation. Looking at the DJI, this is our Dow Jones Industrial Average. Down day on Thursday, made a higher low on Friday. Still trending to the upside, obviously. We could look at a return to the swing high if it were to, come down this coming week. We could look at this line around 16,106. Also, we've got this trend line that we're watching. Until this trend line is broken, I think the overall trend of the Dow is safe to assume that it'll continue upwards and be something to watch there. Now, the better buys on your stocks that follow the Dow will be off of support, and as the Dow is moving positive. So if the Dow moves positive, you see Dow stocks move positive. It's not because they follow the Dow chart. It's actually this chart follows their averages, but it's hard to watch 30 stocks. You can watch one chart and get a depiction on, hey, I was interested in buying Goldman Sachs and the Dow's going well, so I'm going to buy Goldman Sachs. Something to watch all the time regularly is your indice charts. The Dow Jones Industrial Average is going to be one of those. Did make a higher low on Friday from Thursday's fall, so I don't think we need to be terrified, but I think we need the confirmation of Monday to get a view of overall direction for the Dow. Up next, taking a look at the Nasdaq the Ndx chart. A lot of our technology stocks are going to follow with the Nasdaq. It took a bigger fall than some of the others on Friday. It did make a lower low, and that's a little bit concerning for me, because I've noticed a lot of the technology stocks leading the S&P 500 over the past few months, where if they start falling, it's usually a day or two before the other indices will kind of catch that blip. So for the Nasdaq, I still think, uptrend, unless the uptrends are broken. If the Nasdaq wanted to make a good fall coming into next week, maybe hit 34.95 up into 3,500 or so, 35.10, I think it'd be just a good opportunity to buy some of the technology stocks that people have been looking for entries on. So for the Nasdaq, took a big fall late Friday, and got this little gap that we could come down to fill, which isn't far below it. So, another thing to kind of watch for a bounce on. But overall, still uptrending. And it really isn't what happens in a single day or a couple days that matters much when looking at the markets. It's the overall trends. And you can use down days to your advantage to simply get better buys. Now, the other thing I'll say too is, if you look at the chart through the last year, pretty much any time it put in a nice, good-sized down candle, it fairly quickly reversed. We saw it recently here, just a couple days later. You put a big down candle here, a couple days later, a down candle here. You went sideways for a couple days before making your next jump, and which subsequently led to a higher low. So if you start to see some flattening out in the Nasdaq, even if it's a little lower, if the intensity changes, time to start looking at those technology stocks coming into next week. And finally, RUT, our Russell 2000, the small cap index. Again, higher low on Friday, fairly decent day from its drop on Thursday that actually just filled a gap, which is all it did. It came down, it filled the gap, and so far for Friday it moved positive. I would like to see it. This yellow line's my 8 moving average, a good judge of overall trend. You can see it stays pretty close to the candles as they go up or down. I'd like to see it come back above that 8 moving average to have a better sense of, a better bullish sense currently on small caps. I think small caps are going to have a better 2014 than people expect, though. Probably even better than a lot of your large caps and S&P 500s and stuff like that. But with the small cap market, the RUT index that we watch, positive movement to continue coming this week would be a very, very bullish indicator after this gap fill took place. Otherwise, if the markets get a little hairy, we do have this trend line coming through here that could be found as a support point. So, watch your combination between the SPX chart, the DJI chart, the NDX, RUT, the major indices, and they'll definitely improve your trading, because most of these stocks that you trade generally have a positive beta, and that beta rating is how they correlate to the indice which they follow. So positive beta stock, market goes down, generally your stock goes down a little bit. Market goes up, your stock goes up, and that beta, the number that's associated with that beta, is the multiple by which it performs on average to the indice. So overall, Friday saw some higher lows from Thursday's drops, and therefore we got to use Thursday's low on our indices for depicting our bullish or bearish sense. It'll be interesting to see where we open up on Monday, because yes, after the new year, the first couple trading days went down, so that could cause a little bit of fear. But as long as we hold these uptrends, use the fear to your advantage and be looking for the stocks that you've been wanting to buy, and buy them so long as they're off of support and your trend lines are held. So this is Coach from WinningStockCoach.com going over the market overview for the first full trading week of 2014 beginning January 6th, and a little bit of confirmation needed overall, but we'll get that confirmation I think early on Monday and can set us up for some good trading for 2014. Regardless of the direction, we'll know how to trade it.